Hello, everybody. This is Joshua Hayes. We're here with BigWaveTrading.com for the Friday, February 20th stock market wrap up for you to use all weekend long for Monday. Now, I'm going to be gone all weekend in Oahu, so if you're my gold subscribers or platinum subscribers listening to this, or even my silver subscribers, just know that I'm not going to be able to take any questions or even chit chat with you on the chat room for Saturday and Sunday, as I will take my laptop, I will check the forums for questions, and I'll randomly check on the market because I'm just like that. I like to know what the futures are doing, even though it's not important at all. And so I'm not going to be too connected, but I will try to check in for an hour each day just to check on the forums. Now, if I was on vacation during the week, I'd be checking in a lot more than that so I could scan my charts, place my orders, and tell you what I'm doing. So anyway, let's just go ahead and look at how the market did to end the week. New York Stock Exchange dropped 1.57% today. The only good news is that during the intraday session, it was a little bit worse, and it actually found some support and rallied off of it to the top. Now, volume was heavy today, but I'm sure it wasn't. I haven't checked yet because I'm just focused on my charts. I need to start reading the news, and I tell you over and over that to take unbiased positions, I don't pay attention to the news. So it was probably options expiration today just by looking at the volume surge. But still, even on a down 1.6% day, it is technically distribution. But it is nice to see a tail to show some kind of support around the November lows for the New York Stock Exchange. So it could be a little bullish. Now let's see what the S&P 500 did, which is basically its brother. And as you can see here, it had the same thing. It was down 1.14% with higher volume, which technically makes it a distribution day. And as you can see, with the higher volume being so much bigger than anything we've seen going back to December, I think it's safe to say that today was options expiration. However, the amount of tail that you see here, let's go all the way out on a plus sign. Look at that big old support. I mean, it was way down there. I mean, the market looked like it was ready to break down at one point intraday when the S&P 500 was hitting 754. As you can see here, the November close was at 752. And then it hit a low of 741. So at 754, it looked like that the S&P 500 wanted to go all the way down to the November lows. But it found some support, even, and that's why it's got such a big tail. So it's not as bearish as a 1.14% drop would seem. So we might have a little bit of support here if the options expiration volume holds. Now, if it's not options expiration volume, I apologize, but it just seems like it would be because it's always the second to last Friday. Actually, I have a little position right here, 220. I can find out right now just by looking at my CBOE thing. 20 is highlighted in yellow. Yellow means that it's denotes an expiration data. So let's go back to 20. It was 1, so it is U.S. and Canadian options. So yes, it was options expiration day. Great. See how easy I found that out by just looking at this piece of paper from the... Oh, sorry, not CBOE. I gave the wrong people credit. Interactive Brokers. Anyway, let's look at the NASDAQ. Show you the NASDAQ today. Now, it had a little bit of a more bullish session, opening down at 1427, falling down to 1416, and then rallying all the way back up, hitting 1454 before settling at 1441. That gave it only a 0.11% down day on bigger volume, which can have people say, oh, well, it's finding support around the January lows and well above the November lows. Well, you're correct. I mean, because technically this isn't a distribution day. So the NASDAQ does appear to be more bullish than the New York Stock Exchange. And how I can really tell that is by looking at the white line down here, relative strength line. Even though the money stream line is breaking down and shows it hitting new lows ahead of the January lows on the price, the relative strength line even moved up today when the NASDAQ fell the 0.11%. And let's look at the NYSE to the S&P 500. And as you can see, it's moving down during the exact same time that the NASDAQ happens to be rallying up off the lows in December. I apologize. There seems to be some police cars driving by, and if you hear that, I'm not being arrested, everybody. Okay, and I know that was lame. Anyway, so for the past 5 days, NASDAQ lost 6.5%. NYSE lost 8.6%. Yeah, I understand why everybody's so bullish about looking for a bottom. Not. S&P 500 lost 7.8%, and the Dow Jones Industrial Average lost the least, probably, 7.15%. And then it also, Dow Jones Industrial Average, 7365. 7365 is lower than 7552. So not only did the Dow Jones close at a 6-year low yesterday, it's closed at another 6-year low today. And this time, the November lows of 7449.38. So now it's actually closed below the lows in November. So now it's not only closing at a 6-year low, but it also hit 6-year plus low. So not good overall. The last one I want to look at is the S&P 600. S&P 600 for the past 5 days, down 7.94%. Ouch. Higher volume, but once again, down only 1% distribution day, but nice tail signaling some kind of short-term support with that options expiration. Okay, so we still have 4 minutes. Now, during that time, I want to show you what the Nikkei did. Just in case we're the same way, Nikkei's just as weak. Past 5 days, though, down only 3.75%, which means, the American stock exchanges are leading to the downside, right? And if we go back to Japan, I want to go back on a monthly here. I can show you that from its highs in 96 that it has till now, from 1996, yes, folks, almost 13 years later, it's still down 66%. And actually, if we go back to its top in 1990, gulp, 29 years later, you can see it's down over 90%. But like I said, even if you're in a secular long-term downtrend, there was a 51% rally on this big index there. There was a 57% rally there. There was, from the 2001 lows to the 2002 highs, there was 22% there. 2003, there was 128% rally. So still, there's going to be opportunities to make money even if the Tokyo index of 1990 is the same as the NASDAQ stock market index of 2000 or the New York Stock Exchange index of 2007, with housing bubble being the ultimate bubble that collapsed both Japan and our country. So just something to keep in mind. How has China done during the recent times? As you can see, it was up 1.54% today, just once again looking much better than the United States or Japan. And for the past 5 days, are you kidding me? It's up 0.6%, which of course is beating the negative 3.5% of Japan and beating the negative 7 to negative 8 to negative 9% losses of America. And since the end of January, China is up 13%, while let's use the NASDAQ as a reference. Since the end of January is down 2%, up 13% to down 2%. Is the Shanghai SE Composite leading or the NASDAQ? I think we know the answer. Telechart, can you please get me some nice hot green charts like this AIPC that I'm long over here in the NASDAQ that I should have been long from here? If you would have had over-the-counter bulletin board data, then I would have an actual... then I would have an actual... Oh, what happened there? Why did that lose it? Let's do that again. Then I would have an actual 200% gain instead of... sad, lonely, but good enough, but still depressing 27% gain. I'll take whatever I can get in this market, but Telechart, by not giving me this chart pattern back here in June, you did cost me making quite a little bit of money. So what it looks like on Zoom 4, perfect. This is what it looks like on Zoom 5. Let's show you what it looks like on my laptop when it's nice and thin, so you can see like how tight it is, how awesome the breakout is, and just how wonderful the uptrend is. Come on, Telechart, get on it. Anyway, let's look at platinum today. Platinum up 1.31%. Let's look at silver. Silver up 2.71%. And let's look at gold, up 2.02%. Overall, they're just looking fantastic. I want to show you gold, and if you would have gone long gold with the move over the 50 back here in December, you're now up 22%. Better off yet, if you went long silver with the move above the 50-day moving average, you're up 40%, which is even better. And I want to reference you to AGQ, which since its breakout has now given you 43% move in silver. And then DGP, which since it's basically its long signal, has given you 11% gain in a very short amount of time. Then let's look at SLV. SLV has given you a nice gain. Let's just go whenever it went green bop. of 14% there. And then GLD, whenever I made my first long, we'll just go back to that one, up 10%. Second long, up 8.5%. And then the other long, up 9.27%. As it pulled back to get that filled. So that's it. I don't think I have anything else to show you. Oh, what am I thinking of? Let's close it out on the dollar. How is the dollar being crushed? Not very much. Still, the dollar, as you can see today, was down 1.24%. And what was silver? Up 2.71%. Look at the relative strength line of silver. Look at the relative strength line of gold. And look at the relative strength line of the United States dollar. I think it's obvious which three are leading. Anyway, I'm going to go and wrap it up there. This is Josh Hayes of BigWaveTrading.com. Part 2 and Part 3 are next. Aloha.